Hey, Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you're getting sort of value or entertainment out of these videos, I'll ask you to hit thumbs up and subscribe. Questions, comments, put those below. As promised, this week's going to be the deep dive on the Canadian housing market. All the data here for the month of June. Just a lot happening in the housing market. You've got a lot of policy changes. This past week, we had the Bank of Canada come out. We had CMHC come out. We had more policy announcements from the Conservative government for the upcoming election here in the fall. So there's so much happening right now around the housing front, which is really front and center from a national perspective. The discussions around affordability, inflation, job loss. I think that from a societal perspective, we're kind of at this pivotal point in time where I think there's deep levels of angst and frustration. And again, I think that's even more crucial as we enter, as we get closer and closer to what looks like an upcoming election in the fall. So I kind of want to touch on this first and foremost is kind of as I've been discussing in these videos for the number of months now, is that these markets all move in very similar fashion. They all are highly correlated. So and that's almost on a global level, right? So what happens kind of in the U.S. housing market, for example, tends to almost mirror what's happening on a Canadian level. Now, there are micro pockets, but for the most part, global assets, global property markets, particularly, they all move in tandem. So, and that's all because most of this hinges on interest rates, on central bank global monetary policy, et cetera, et cetera. But I want to look at the Canadian housing landscape here because it's following the trajectory that I see from a feet on the ground perspective here in Vancouver, which is that ultimately sales activity peaked back in March. You can go back, look at it now in hindsight and say, holy smokes, yeah, that was crazy back then, wasn't it? And that's really what you're seeing now starting to show up in the data. But I remember sort of telling people several months ago that, hey, listen, like things are changing. Like this, you can clearly have seen it. But certainly took a lot of negative press for that. But we're seeing it showing up in the data now. Is if you look at it on a seasonally adjusted basis, sales on a national level are now down 25%. So people that come out and say, yeah, Steve, it's slowing because it's the summer. Well, it's like, again, no. This is why you seasonally adjust housing data, so that it kind of strips out the noise. So what we saw was sales activity levels. Yes, they peaked in March. That's early. Typically, they'll peak in April or May. So we had a sort of an early abrupt end to the sort of housing boom in March, and now from a seasonally adjusted perspective, again, sales are down 25%. And so you look at new listings, they're kind of humming around. They actually saw a modest decline here in June, but the big picture is now, so you've got this slowdown in housing. Clearly we've basically sucked the froth out of the housing market. You've got a deceleration, or a rather significant deceleration in housing activity. And now it comes down to new listings, because you ultimately need, if you get a situation where you get sales falling and new listings increasing at the same time, that's going to push your months of inventory up relatively quickly, and that's when you're going to start to see some price breaks. But we're not seeing that. So new listings we're actually down on a month-over-month basis, again, seasonally adjusted. And so if you look at the sort of picture right now is, we have a long ways to go. You've got, the number of total active listings, again, seasonally adjusted, total active listings for sale in Canada are really at record lows still. They are at rock bottom. Now with the deceleration in sales, we can see months of inventory now, right? Which is this is the key. I really want to emphasize this. Months of inventory is the truth metric. Basically, you can look at that, and that, for the most part, will not lie to you. So you went from a record low of 1.8 months of inventory in March, all-time record low from a national level. Again, it's not just some small pocket of Canada. You're talking nationally, the months of inventory contracted to all-time record lows, and at 1.8, and now we're slowly picking up. We're at 2.3. you need that metric to basically come in around 4 to start seeing, downwards pressure on prices. It basically pushes the pricing power into the buyer's camp. So we're a long ways away from that. Now, don't get me wrong, I think that we could get there eventually, but this is not going to happen in a couple months. This is going to take, 5, 6, 7 months from now just to sort of get anywhere close to that level, assuming that sales continue to stagnate. So now if you look at it, say, okay, well, we've had, now that the froth is out of the housing market, we can kind of take a step back and look around and see what happened. You have, national home prices accelerated still in June to their all-time record high. So again, keep in mind, this is a lagging indicator, right? I've always said the benchmark lags by anywhere from 3 to 4 months, sometimes even as much as 6 in certain markets. So you've got the home price index is now up 24.4%, all-time record highs. This surpasses the 2017 housing move. If anyone remembers, that was kind of the time when we were starting to stick in foreign buyers taxes, empty homes taxes, speculation taxes. It was a huge conversation topic about foreign money coming into the housing market. Well, we just eclipsed that number, on our own during a pandemic, during record unemployment. So, the pace of home price acceleration is mind-boggling. And I think that's why it's getting such political attention now, because there's no one to really blame. Like the foreigners were kind of like that scapegoat in 2017. And now everybody looks around and says, wait, hold on a minute. Like, we don't really have a whole lot of immigration coming in because there's, the borders are closed. You don't really have any foreign money coming in really at the moment. What is going on? We've got the massive price acceleration. So this is why it's becoming more and more of a political conversation. Of course, you can see that this home price inflation is spread out across the country. So, if we look here at the major metro cities, I mean, we can see even my good old city of Calgary there, which I've been, pounding the table on for a while now, up 12%. I mean, a 12% move for the city of Calgary is like 30 or 40 for Vancouver or Toronto. So, I mean, that's a big move for a market that really hasn't moved in a decade. So this price acceleration, again, is across Canada. But this is all part of that pandemic trade, right? You had winners and losers during the pandemic. We know that one of the losers, for example, during the pandemic was airlines, and housing and people in the real estate space were the winners. They benefited off of being locked down and staying home and wanting more space. And now as you reopen the economy, that trade is reversing, right? Like, who are the winners today? Well, it's the airlines. I think Delta Airlines said they had the most profitable quarter since 2019. And so now, and you're seeing housing on the flip side is now aggressively slowing down. And so it's going to be very interesting to see as we move forward into the fall how this plays out. Obviously, for those of you that have been following this channel quite closely, you'll be the first to know. I think a lot of this now, we look at the catalyst and say, okay, well, what is the catalyst moving forward? I personally don't see a significant decline in the works unless, like, your decline is only going to come, in my opinion, it's going to be an external financial crisis. And this is something I've talked about with Keith Dicker at IceCap in our interviews. It's going to be an external crisis in the Eurozone or something. Something's going to happen in the credit markets, the bond market, somewhere else, and it's going to ripple through to our financial system. Or you get meaningfully higher rates, which, again, I don't see any scenario where you actually get a normalization in interest rates. You can try to raise interest rates, and the minute that you get 50, 75, 100 basis points in rate hikes priced into the market, that's basically when you you basically prick this global asset bubble that central banks are responsible for creating. So I don't see that as a scenario. I see it as a financial repression. It's ironically enough is that we're getting all this inflation numbers coming out, higher inflation, and you're actually seeing yields collapsing globally. You're seeing yields actually fall because this inflation this idea of 4 or 5% inflation was already priced in by the markets, and now that it's being publicly released, you're actually seeing yields fall off. So that's a really important story for housing. So in my view, we also had the Bank of Canada's Tiff Macklem out this week with their update on their monetary policy, and I mean, I sit there and watch a 45-minute long Q&A presser with this guy, and my whole takeaway from that is like, this guy is never raising interest rates. Now again, eventually they will, but you get my drift. Like, they raise interest rates 50 basis points. Okay, who cares? And that was basically the memo from this guy. They're actually updated their monetary policy report. The Bank of Canada looks and says that in 2022, housing is actually going to be a net drag. It's going to be a drag on GDP growth in 2022. So some cautious words from Tiff Macklem. Clip them in right here.
And as a follow-up, has the housing market frenzy passed its peak, or do you foresee some price escalation again later this year?
Well, if you look at our outlook in the monetary policy report for housing, we've already seen some moderation in housing activity. The levels remain quite elevated, but we've seen some moderation. We do expect to see continued gradual moderation. In the last part of the report, in the risks, we indicate, look, there are some risks around that. That moderation could be faster than we expected, than we've projected. There's no question that an important reason, one of the unusual circumstances of the pandemic is that everybody's been at home, and people are working at home. Their recreation is at home. Their children are studying at home. Their meals are all at home. Understandably, they wanted more space, and that's boosted demand for housing. We'll have to see. Once we can all go, now that we can go back to a restaurant, do you still want a bigger kitchen? We'll see. So that's hard to gauge. It could come back faster. On the other hand, we've got a relatively strong growth forecast. We expect Canadians will be getting back to work. They will be feeling more confident about their incomes. We expect immigration rates to ramp back up. That's important to growing the potential of our economy. So, there are also some other reasons why it could be stronger. I think what we've put in our report, I think, provides a balanced view.
Just a couple other last housing announcements, policy changes. We saw CMHC come out in the past week, basically reversing course on their tighter lending standards for insured mortgages. And why? You'll remember at the onset of the pandemic, these guys were concerned about falling house prices naturally, realistically, rationally. And so they tightened their lending standards, hoping that the other private insurers would follow suit, but they did not. The private insurers gladly took the new business, and you actually saw CMHC's market share for insured product in 1 year. It just took 1 year. Their market share dropped from about 50% down to 23%. And Sagan, who's one of the private lenders, formerly Genworth, in Q1, they reported a 92% increase in new insurance written. So now CMHC is reversing course, trying to get some of that market share back. It's going to give high ratio borrowers more options in terms of insurers, so that will be beneficial. I don't think it moves the market much at all. But you've also seen now as we're wrapping up for this election, we're actually seeing the Conservative government came out now with a new housing policy, which again looks like they're talking about putting a freeze, a quote unquote a freeze on non-resident foreign buyers. So basically saying, hey, listen, if you're a foreign buyer and you're not living and working here, you're out. So we'll have to wait and see how that policy actually looks. Now, they were kind of framing it as, listen, this is a one-up. This is actually, we can't have Canadians being priced out of the housing market. The Liberal government's 1% annual tax on non-utilized non-resident foreign owners, that 1% annual tax on their real estate isn't going to move the needle. So they're saying, hey, listen, we're going to one-up you, and we are going to put a freeze on new foreign purchases. And so, again, I think this is kind of playing into, not that I necessarily think that's going to have a massive impact, because we've already got a foreign buyer's tax here in Vancouver. I think more it's a psychological thing. But why does the Conservative government do this? I look at it and say, because I think they're playing into sort of this raw emotion that clearly housing is front and center of everybody's lives right now. It is the key point of political conversation. It is the biggest social friction here in Canada after seeing, again, 24% price acceleration, that they're playing into this and saying, listen, we're going to bring back housing for Canadians. So in my opinion, a strong political strategy, not necessarily convinced that this is going to move the market. I think Australia actually has something similar to this, where foreigners are only allowed to buy new housing stock, new construction, pre-construction, etc., and cannot buy into the resale market. So very interesting to sort of see that shape up. But as always, hope this helped. When I started this channel again, when I got into the real estate segment, I really realized how poor the analysis was here on Canadian housing, how biased it was. It was basically pumped out from the big banks. And so, that's been kind of my whole motive behind this channel, is really just bringing sort of an alternative view, just looking for and seeking out the truth. So again, hope these kind of videos provide some sort of value and education to those trying to make really what is the most important asset class in Canada, and what is probably the largest financial decisions of every Canadian's life. So as always, we'll see you next week.